What's up, YouTube? It's your boy Steve from Printer Gang Investments, back with another video. It's a momentous occasion. We had an action-packed week, and now we have the market at all-time highs, Dow 40,000 for the first time in history, and it's looking like this is just the beginning. We on the start of a bull run, so I want to react to the CNBC analysts celebrating, talking about how they feel. Is this trend going to continue, or are we hitting the top just to come down to a bottom? Let's get into it.
Scott, happy Friday. So we're right there at 5,300 on the S&P, edged up today. You think the CPI read we just got this week, not too hot, might warrant a move higher from here?
Well, so I think the CPI read, in addition to the employment data, from last week, all just kind of set the stage. And you mentioned earlier, we've seen the bond market rally, which has kind of given this rally some new life. And so as quickly as we sold off heading into Q2 around the earnings period, beginning mid-April, the data and the conviction that this incrementally hawkish Fed narrative is receding has been enough, I think, to stimulate new money flow to equities.
Interesting. So, Deepak, I do want to go back to the Dow.
I want to talk about what he just said, because looking back on the past month or two, this was one of the craziest dips. And if you were bullish and you were looking forward, it was really one of the greatest opportunities. We came into earnings season after in the crash after the Israel situation. Then they thought the Fed was going to get hawkish. The market crashed. Then all the companies beat earnings. Then jobs came in, more unemployment. Then CPI came in cool. Jay Powell kept interest rates the same, and the market took off. So sometimes that just lets you know you just got to ignore the noise and just stick to your bull case out here. But let's keep listening. Let's keep listening.
Right now, because it's a big headline maker on newspaper front pages, to the degree that we still look at newspaper front pages. But to a large degree, the big stocks we've been talking about for the past several years have been the once named Magnificent Seven. What's the significance of the Dow in the environment that we're in right now?
Well, it just tells you that the rally has broadened a bit. It's not just because of the tech. Dow has much more industrials, a little bit more value tilt to it than, let's say, the S&P. So I think this earnings season, we have seen how, some of the other parts of the markets are also, pushing their weight. So be it financials, be it industrials, utilities is having a moment. So I think it is just not a Max 7 rally anymore. It has broadened out a bit, which is heartening to any.
Did he just say the broadening, people? Did we just have the broadening and didn't realize it? Because he's right. It wasn't just tech. Industrials broke out. Energy broke out. Crypto broke out. Everything broke out. So it's like, things are looking good from here. And what I really like about it, a lot of the stocks that I really feel are going to take us to this next wave, they aren't even at their all-time highs right now. Like Palantir, like a lot of these other software companies. And with the AI results we've been seeing with companies like Dell reported, even Palantir's earnings, some of the other companies, it's looking like AI is still intact, the trend's still here, and this next earnings season, like I'm really ready to get past these next 2-3 months and get all the way to next earnings season, because it's looking like this is going to be interesting. But let's listen to a little more.
Any bull out there. And the only thing I would say is, and I completely agree with Scott here, that the markets might be a bit premature to start factoring in rate cuts, just because we've gotten one non-farm payroll number below 200K, or a slight miss on the nominal CPI does not mean that the Fed is just ready to start cutting rates. From our estimate, probably it's not going to happen until the September meeting at best.
Okay. And Scott, on a day where we do see the Dow,
I feel like that's not actually a bad thing, though. If the Fed waits to cut rates, as investors and traders, I feel like that's just more time for us to buy these stocks, because whatever price you think is high now, whatever price they are now, when the Fed finally does cut rates, unless it's because we're in a recession or something, these prices might look cheap, man, for all we know. But let's keep going.
Now hitting 40K. At the same time, the Russell 2000 smaller stocks are a little bit in the red. Is this enough broadening? And what does it tell us, the relative lack of action in the Russell, though it is higher for the year, of course, and doing okay? Well, what does that tell us about the state of this market?
Yeah, I think the broadening discussion has been going on for many months. Heck, we've been talking about it since last summer in terms of an earnings broadening. And early on, the view was, hey, we want to be barbell growth with cyclicals as a means of getting to an eventual change in the Fed hawkish paradigm. Now, what you get with small cap is a higher degree of economic sensitivity. You even get a higher degree of debt leverage, if you will. And so the impetus on small cap to more purely reflect underlying economic conditions is there and is more relevant than it is for the S&P 500. So essentially what you're getting here, well, I think small cap has been volatile of late, but I do think that as you get closer and closer to this inflection in Fed, we have to be aware that what's going to come with that is a little bit more concern regarding economic trajectories. But all told, the valuation for small cap is setting up for this to become an ongoing broadening and rotation trend.
I think he's right about that broadening. And like you said, even with the small caps, even in a way, look at the meme stock rally. All of it. Like it started with just NVIDIA, Meta, the tech stocks. It spread out to Palantir, other AI stocks. Then it spread out to energy. Then it spread out to industrials. And then small caps got it. We just saw even crappy companies with low balance sheet, short float stocks, everything started going up. So, of course, the meme stock rally, you know what I'm saying? It was just, a big trade. I actually made money on that. It was pretty fun. I'm going to talk about it. But it does show strength in the market. I think I was listening to Tom Lee say, he said the fact that something like that's even going on is just showing there's risk appetite in the market. So if they'll go that crazy over that, what you think they're going to do when these AI stocks continue to take off? These chip stocks, the ones that aren't already ran up, continue to take off. When these software companies continue to take off. Like, you got to read between the lines, people. You got to read between the lines, people. But I like what I'm seeing, man. It's looking very good for this market. I want to hopefully load up on some more Palantir before they get back up to their highs, hopefully, you know what I'm saying? It was a great week. Market hit all-time highs. Like I said, I went on that, I was in that meme stock trade. I bought some AMC at 3. Got out like 10, 11. I made like 750% on some calls. Bought some long-term plays, a few shares with the money. So, it was a good week. It was a good week, man. But I'm going to give y'all guys some more reactions. We're going to look at more things going on in this market. And I'm going to be back. It's your boy Steve from Printer Gang Investments. I'm out.